Most traders are losing money by following so-called expert strategies, but these next 12 minutes can change everything for you. I'll show you the exact 5-step system that improved my students' performance by 196%. And it's not what most gurus are teaching. After blowing multiple accounts and losing over $50,000, I finally realized what the top 1% traders are doing different. It's not about complex charts or having insider information. It's about a specific framework that will set you apart from most traders. With this proven system, I have been able to generate over $75,000 consistently every month and have taught these principles to thousands of students who are consistently profitable while most traders continue to lose. And that final 5th step is the most crucial one that 99% of traders miss completely. This one adjustment can double your win rate overnight. So let's get right into it. So first things first, we got to get your charts right. So the first indicator you want to add to your charts is called kill zones, right? So you go to indicators, you're going to type in kill zones, and you're going to get the one by Oscar VS, right? So when you click it, it'll come up like this. You're going to go to settings. You're going to go to inputs, turn them all off besides New York session or the session of your choice. I prefer New York because of the volume that's provided in it. So now that we know, when we see this gray box on the chart, that we're able to take a trade because we are in our session, right? So I'm going to remove this big white line right here because we don't need it. So let's go to style. Turn that off right there. All right, so this is our charts right here, and the next indicator that you want to add is called a moving average. We're gonna get this one right here, put a star next to it to save it, let it come up. We're gonna change this settings to 13 right here. So just put that to 13. Style, I'm gonna make this white, make it a little bit thicker. Okay, so this indicator, the EMA, is basically letting us know what trend we are in. So when the line is on top of the candles and the candles are underneath it, bouncing off of it, that means we're in a sell condition, right? So we should be looking for sells. If the line is at the bottom and the candles are bouncing on top of it, that means we should be looking for buys, right? So that's very simple. That's all we're using it for. The next thing we need to know how to do is draw an accurate trend line. So let's just go through and mark up some trend lines. So a trend line is very simple. There's no need to complicate it. So we're going to go take our line tool right here, and we're just going to draw it at the bottom of these wicks, right? If you don't know what a wick is, it's basically the tail coming out the candle, right? So these little lines right here, we want to have at least 3 taps of this trend line, right? So we have 1 tap right here. I'm counting these 2 as 1 tap. 1 tap, 2 taps, 3 taps, right? So we have 3 taps right here, or you can count them as 1, 2, 3, 4, 5, 6. However you want to do it, it doesn't matter, as long as we have 3 taps right here showing that there's a trend, right? We keep bouncing off this trend line. That's how you know you have an accurate trend line. You want to draw it at the tips of the wicks, but you want to draw it to where it makes sense, right? So if we could get 4 tips of the wicks touching this trend line instead of having it like this where we only have 1, 2 taps touching it, then obviously I'm going to draw it like this because I want to have as many taps as possible. So that's how you draw a trend line. And what we're looking for a trend line is for it to be broken. So you see, as it was broken right here, price melts, right? So that's our first confluence. Now we need to identify supply and demand pushes. It's very important. This is how we know when the big players enter the market. And why do we want to know when the big players enter the market? Because they're going to move the market and we want to ride their wave, right? We want to see a big player enter and know, hey, it's time for us to get in because these big players are entering, right? So it's very simple. Let's just get this arrow real quick. Okay, so this is a supply push. Now, how to identify a supply push is we're looking for either very huge candles that are bigger than the rest, right? Showing a lot of momentum and strength in the markets. But typically we want to see 3 candles the same color that are showing momentum in the market. That's all supply and demand is. It's just momentum. So we have this huge candle. We have 1, 2 candles the same color, right? But this candle is big enough to make it a supply push, right? So is this one. We have 2 huge candles, right? These candles are bigger than all the candles around it. So we have a supply push right here. 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 We have 3 candles. 1, 2, 3. A beautiful supply push. This is a supply push. Huge candle. 1, 2, right? So most of the time it's going to be 2 to 3 candles the same color. The lower the candles, the bigger the candle has to be. So it could be 1 candle if it's a huge candle, right? But most of the time it'll be 2 or 3. So that's a supply push. Now, what is a demand push? The demand is just the opposite direction, right? Demand means buy, meaning we're going up. Supply means sell, meaning we're going down. So what do we have right here? This is a demand push, right? We have multiple candles, the same color, huge, large candles showing strength, showing momentum, right? So 1, 2, 3, 4, 5 candles, all the same color, no reds in between. It's looking beautiful, showing momentum in the market, right? Now, this is a 1 candle demand push. Look how large this is, right? Look how large this is. It's a demand push. We have a 3 candle demand push. 1, 2, 3 demand push, right? So we're just looking for momentum. Don't overcomplicate it. We're just looking for large candles or multiple candles the same color showing momentum in the market. So that is our second confluence. Our third confluence is a breakup structure. Now, market structure is very important when it comes to trading. This is how we determine what the market is trying to tell us, right? So the way market structure works is we move in higher highs and lower lows, right? And if you want a reliable broker that you can trade MT4 on, then you're going to want to go with Henkel Trade. I've been with them for years, and they're the only ones that I trust with a large amount of money. So I'll put my affiliate links down below. If you want to trade with the people that I recommend, then go to the description, click that link and sign up. Let's get back to the video. So when price is in an uptrend, we're doing this: higher high, higher low, higher high, higher low. But what happens when we come make this higher high? Instead of making a higher low, we come and break the pattern, or we break the structure that was formed, right? So now we have a lower low instead of a higher low. So what does this mean? That's an indication that the market is about to switch trends. So instead of being in an uptrend, now we're going to be switching to a downtrend, and instead of making higher highs and higher lows, we're going to make a lower low, a lower high, which we would look to enter right here to catch this move down, making a new lower low when the trend changes directions, right? Now I could show you this right on the chart. So we had our higher highs, higher lows, higher highs, higher lows. What happened? Instead of making a higher high, we made a lower high, then a lower low, and price changed directions, right? So this is the breaker structure right here. So we would mark that last higher low that was broken with a line to confirm it. Like, hey, okay, we broke structure. We were supposed to make a higher high, but instead we made a lower low. So that is our breaker structure, and that is our third confluence. Now our fourth confluence is we need to have a gap in the market. Now these gaps in the markets are like mistakes that the market makes. Now the market don't make a lot of mistakes, so we need to use these to our advantages, right? So a gap in the market is basically a candle that doesn't have wicks to either side, right? So if I see this huge supply push, because they're mostly on supply and demand pushes, I see this huge supply push, and I look to the left or the right of the candle, and I notice, hey, there's no wicks right here. Now the way that the market works is there's supposed to be wicks on both sides of the candle. So we see this large candle right here. You see how the bottom of this wick on the candle before it and the wick on this candle after are basically touching, right? If you were to draw a line from the bottom of this wick out, right, this candle wick is touching it or breaking through it, right? So that's how the market is supposed to work. But sometimes it pushes too strong, which leaves a gap. So you want to get you a horizontal ray, put it at the bottom of the candle before the one that we think has the gap, right? So if I think this has a gap, I look, there's no wicks to the side, I'm going to confirm it. I'm going to go to the candle before it, put a wick at the bottom of the candle, or the wick if there was a wick sticking out. We're going to skip the candle we think has the gap, go to the third candle, right? Get a horizontal ray. We're going to put it at the top of this candle, right at the top of the wick. And now you can see if these lines are not overlapping, then there is a gap in the market, right? So the line should have been looking like this, but since there's a gap, there's a space in between. So once this gets filled, we would enter a trade. Okay, so now that we confirm that there's a gap, we're going to take a rectangle to draw our supply and demand zone. So we're going to go to the first line that we drew, which is the start of the gap, draw from there to the swing high. Now the swing high is just the highest point that the price went before it dropped, right? So this is the swing high. We draw like that, we'll drag this out, right? So now we got our supply zone. So we're waiting for price to come tap this to take a trade. So now let's move on to our fifth confluence, which is our last piece of the puzzle until we put everything together in a strategy that you can use. Now the fifth confluence is using this indicator, the EMA. So if we're looking for sales and this EMA is agreeing with us, telling us that we're in a downtrend, that we're looking for sales, that is the last piece of the puzzle to give you confidence to enter this trade. But now let's put everything together on a trade that I actually took live and called in my Discord just 2 days ago. Okay, so I'm gonna write out the steps and show you it real life in a trade that I took, right? So step one is trend line break. So we're waiting for a trend line break, right? So if you can see right here, we have a trend line right here forming. We have multiple taps at this zone. Looks beautiful. We get that break, right? And on that break, what do we get? We get a supply push. So we put number 2, supply push. So this is our supply push. We got 1, 2, 3, 4 candles the same color, even a large candle in the middle. So after we identify that we have a supply push, what's the next step? Break of structure. So let's write that in there. 3, break of structure. So we got a trend line break, a supply push. Now let's identify a break of structure. So let's see. So price was making higher highs, higher lows. And then what did we do right here? We started making lower lows, lower highs, right? We made a higher low right here, made a lower high, then a lower low, right? Getting that break of structure. So what are we doing now? We're waiting for it to come back up to make a lower high for us to enter to take it down. So yes, we have a break of structure. So check mark. Now let's go to number 4. Confirm gap in the market. So let's zoom in to our supply push and see if there's a gap in the market. There's no wicks to the left or the right, so let's confirm it. Let's get a horizontal ray. We're gonna go to the candle before the one that we think has the gap. So it's this one. Put it at the bottom of that wick, another ray, skip this candle, go to the third one, put it at the top of the wick. Now we have a space in between the lines, meaning that we have a gap in the market. So we take our rectangle and mark up our supply zone. All right, this is the highest point it went before we drop. So this is our supply zone. So what we're doing now is waiting for price to come, tap us in right here to take the trade. But we need our 5th confluence to confirm this trade and give us the confidence that we need, and which is the EMA. And now the EMA is on top of the candles, meaning we're looking for sells. We even rejected it perfectly, which is a great sign. So we get our sell position, put it right there, put the stop loss at the top of the box. And this was my trade that I called out in the Discord. And look at this beautiful trade. I just took my 1 and 3, but look at this. It just melted 1 to 10. I took my 1 and 3 and I was happy. So these 5 steps right here is the system that I taught thousands of students to use and are getting great results. So if you guys are looking for someone to hold your hand to profitability, then join my inner circle. We have weekly webinars, live trading every day, and you could book one-on-one sessions with me so I can go over your trades and fix your mistakes. And the best part is it's guaranteed. If you don't get profitable in 45 days or less, then I'm going to work with you personally until you become profitable. So this will be the last investment that you'll ever make, because I'm not letting you leave my group until you're consistently profitable. But that's it for this video. I'll see you guys in the next one. Peace.